Good afternoon, ladies and gentlemen. My name is Dr. Robert Mugo. I am a CPA, an academician, and a financial analyst. We are going to talk about lending in the perspective of a borrower. The last session we talked about the consideration that borrowers make to borrow from institution A, institution B, institution C. Today, I want us to go to the biggest lending institutions, fraternity, that is the banking sector. You want to borrow money from the banking sector. What is available for you as a borrower? What advantages do you have if you borrow from the banking sector? What disadvantages do you have or will you be subjected to if you borrow from the banking sector? Banks offer two major categories of loans. There is what we call secured loans. There is what we call unsecured loans. Unsecured loans are given to individuals who provide them with a payslip, or it is given to businesses. I will start with lending to a business. If you are lending to a business, sometimes they may call it working capital management loan. You want to boost your stock. Working capital, it is simply your current assets minus your current liabilities. The things that you own for a short term and the debts that you have also for a short term. So they may want to boost your stock. So what do you need if you want to borrow from a bank? They will need your business financial statements. These could be audited financial statements for the last 5 years, or they could ask you even to give them financial projections. This is my financial status. Where do I dream of getting in 5 years' time? They will ask you to provide them with their income, your income statement, and what we call the balance sheet for the next 5 years. Then with that, they can evaluate and see. They may also need you to provide them with your bank statement. If you are borrowing from bank X, but your income goes to bank Y. If they want to lend you, they will check about your credit rating, your character, how have you been interacting with them. If you want to borrow using your payslip, you go to bank X, you give them a payslip, and then you want to be given money. Most of the banks will require an agreement with your employer that indeed, if we lend to Peter, at the end of the month, Peter's employer will be remitting his monthly obligations. They will consider your salary, how much is your payslip committed. They will make sure that the law provides that you cannot take home less than a third of your basic pay. So if you earn, let's say, 100,000, that's a gross pay, basic of 60, house of 30, other allowances 10. A third of your basic pay, a third of 60 is 18,000. So hata ukipewa loan yote, the deductions, your payslip, you must take home at least 18,000, based on the example I've given you. In this case, you will borrow, be paying on a monthly basis until the loan is done. Most of unsecured loans, the banks use what we call the amortized lending platform. Amortization here, it means you first pay majorly, you pay interest, then you keep on paying the principal. You will find that if you are to pay back 25,000 shillings per month for the next 60 months, you will find that in the first years or in the first months, you will be paying more of interest as opposed to principal. Principal ni ile pesa yenye umepewa na lazima ufanye nini? Urudishe. You may find the 25,000 at the beginning, maybe 18 is going for interest, 7 is going for principal. Towards the end, you may find that if you are still paying 25,000, you may find that 7 or 6,000 is going for interest, 19 is going for principal. I said there are two major categories. There is unsecured, there is secured loans. For secured loans here, we have several categories. There is asset financing. Mimi nataka kununuliwa gari na nataka kutumia bank. There is a mortgage. I want to own a home. Bank finances that. There is also business asset financing, where the bank decides to buy for you an asset. For these loans, you find that the bank will co-own whatever they are buying for you. Kama ni gari umenunuliwa na bank, you will find the logbook will indicate two owners. Bank X, number 1, and then you, number 2. The asset, it will also indicate that. And most of the times in asset financing, they will only provide you with a payslip. With a photocopy of that asset that you own. You find that in asset financing, you will bear all the liabilities associated with those assets. You make sure that that asset is comprehensively insured. If it is a car, it's comprehensive insurance. If it's a building, it is insured against fire and so on. So you want to borrow from a bank. Most of the asset financing loans are, though I'm not saying all, are on what we call flat rate basis. Take for example, a bank will come and tell you, we shall lend you $1 million at 10% per annum. 10% per annum interest. It means that you will be paying interest at a constant amount from month 1 to month 10. Allow me to, for the sake of the ease demonstration, we assume that you borrow at 12% per annum. That translates to 1% per month. If you borrowed $1 million, what is 1% of that 1 million shillings per month? That is about 10,000. You will pay 10,000 interest from month 1 to the last month. So most of the bank loans can take the range of as low as 6 months and as high as even 120 months, depending on the financial muscle of this bank. The advantage if you want to borrow from a bank, if it is asset financing, you will not have cases of fraud, because most people who will deal with the banks, the bank have the muscle. They will do their search, ensure that the asset that is being dealt with is genuine. You have had cases of people buying cars, anapata gari, then anatafutwa na DCI, ati hiyo ni gari ya kuibiwa. It is very rare that you will find this. The other advantage of borrowing from banking sector, you find that these loans, they can give you a huge amount and they can give you for a long period. Disadvantages is that should you dare default, you are done. They will hit you so hard. You must make sure that if you borrow, you pay on time. You can go to my channel, Dr. Robert Mugo, on Instagram, on Twitter, on TikTok. I think I will end at that. Thank you.